Welcome to another episode of Equity Mates, back for another week here at AusBiz. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going?
Oh, I'm very good, Bryce.
Caught me off guard there.
Yeah,
sorry.
I know. Yeah, a bit slow off the mark on this Monday afternoon.
That's because we're talking about reporting season.
It's all we talk about. We're pretty boring, to be honest.
True.
But look, good to be back for another week. Hope everyone is doing okay in lockdown. If you are in lockdown, we're here to talk finance.
Yep. All things finance, and there's a lot happening as always. We've got reporting season winding up a little bit here in Australia, but also overseas it's in full swing.
That's it.
In
that's
the States.
it.
So we're going to chat about it.
Yeah, so in this episode, we're just going to do a quick 101 for anyone in the Equity Mates community that might be new to reporting season. We're going to talk about how we approach it as a long-term investor. It is the prime time for a lot of noise, and as a long-term investor, you have to really try and figure out what's the signal amongst all that noise. Then we're going to talk about this reporting season, what the expectations are for the overall market. We've pulled out 5 expert investors and what they're watching this reporting season. And then we'll close with maybe a couple of company reports that have come through so far. So a lot to get to. Let's start at the top.
Let's start at the top.
For someone who's new to reporting season, maybe hasn't even heard the term before, what is it?
It's a fascinating time of year, and that's what it is. No, look, reporting season, all public companies need to tell their owners what they're doing, how the business is running. They need to report their numbers. And as shareholders, that's us. We need to, we have the privilege and I guess the right to know how our companies are performing, either quarterly or half yearly, as we see here in Australia. The US, they do every 3 months, so it feels like the earnings season never ends over there. By the time they all finish, it's winding up again here in Australia. And I think if I was running a company, I would much prefer the Australian cycle.
Oh, 100%.
Yeah. In fact, I'd be pushing for maybe just once a year.
Yeah, I think there's a rule that it has to be twice a year.
Yes.
So it might be a futile push on your account.
But in Australia, they report every 6 months, or thereabouts.
Generally.
Generally.
Yeah.
And yeah, so now we're seeing, what are we seeing now? The numbers from June to January to June.
Yeah.
We're seeing those numbers come out, and then in February next year, we see the numbers from July through December.
Yeah. Now, you've mentioned there, we see the numbers a lot. What can we expect to see in terms of actual, like, what are they reporting?
Well, a lot of it is their key financials, so their key numbers, revenue, profit. Those are mainly, obviously, the headlines. Pretty straightforward. But then I guess if it's business specific, so, you know, a lot of the tech companies talk of audience or user growth, that sort of stuff comes through. They make mention of competition, you know, that's really some of the key indicators, the key business indicators.
Yeah, so as well as some of those numbers, we'll also get guidance on how the company is seeing their future. You know, we might get projections for the next year, earnings guidance for the next year. And generally, I guess the last thing is, how do we get these numbers? So on the company's website, there'll be an investor relations page where there'll be a media statement, and then generally a PDF document with their annual report where there's a lot more information. Sometimes a slide presentation for analysts as well. So go to the company's website or go to the ASX's website and you can actually get all this information. So I think that's a 101 on reporting season. Let's get into the meat of it.
Yep.
You're a long-term investor.
Yes.
At least you try to be.
I say I am.
At least you say you are. How do you approach earnings season as a long-term investor?
I try to ignore it as much as possible.
I don't think that's the right answer.
No, look, I think what's important is that it's easy to get carried away in the noise, and particularly when companies don't meet expectations. They will often be punished when it comes to the market selling them aggressively, and as a result, they're going to, obviously, share price is going to bounce around at reporting time. But I think fundamentally, if what has come out, like a classic example was Zip last week, they came out and they said that they've doubled earnings or, performing well, yet they still got punished by the share market. I think as a long-term investor, if you're still bought into the thesis of Zip and you're bought into the management and the reasons why you initially made the first investment, then you need to keep that in check and keep that focus over the long term.
So there's a couple of key points there that I think we should just pull out first of all. So earnings season is an expectations game, and Bryce mentioned the whole estimates.
Yeah.
Wall Street banks. I don't know what the equivalent of Wall Street is in Sydney. George Street banks spend a lot of man hours trying to forecast how companies will do. You'll see the term consensus estimates thrown around, and that's what all of the big investment banks, all of the big analysts put their projections out into the world, and the consensus is like the general average of what everyone is thinking. And then the question is, does the company meet those expectations? Does it fall short of them? Does it over-deliver on them? And that's how a lot of the share price movement happens around earnings season. Not related to any company fundamentals, but related to what people expect to see and then what they actually see. And so then the second thing that you mentioned there that I think is worth pulling out is your thesis. So as long-term investors, we have a thesis, why we buy the stock in the first place. And earnings season for long-term investors is all about, does that thesis still hold?
Yeah.
Does the reason that I bought the stock, does the reason that I think this stock is going to grow for years to come still hold? Or are there numbers, or is there guidance, or is there information in this set of reports that suggest maybe I was wrong?
Yeah. But also take into consideration that if Goldman Sachs says that earnings per share should be $2.05 and it's $1.85 or $2.03, doesn't mean that you need to then go and change your thesis drastically or anything like that. Just as you said, they've come out and said this is what their expectations are, but don't take that as an example that your company is failing or anything like that. Keep it all in check.
Yeah. So let's get into this reporting season.
Yep.
There were big expectations, both here, really around the world.
Yeah.
But let's talk about Australia and the US. Let's start at home. Let's start in Australia. What were the expectations for the market overall?
Pretty positive. I mean, we're coming off a pretty lowish base of COVID. Citi had expectations of overall market earnings growth of roughly 35%. Pretty strong. You're not going to complain with that. But as we said, base effect of COVID. And 20.5% without the outsized contribution of the banks and miners. We know that obviously the market is pretty favoured or made up of bankers and miners.
Banks and miners have had a good run, especially miners.
With the iron ore price.
So Citi expect the banks to grow their earnings 52.3% from last year, and the miners on the back of this unbelievable commodity boom to grow their earnings 59% from last year. Those numbers are completely out of the norm, but that's just because COVID decimated everyone's earnings last year.
Yeah, so coming off a pretty low base. So, I mean, look, good to see that it's bouncing back. Expectations pretty good. But if you move over to the States, Ren, I read a recent report by Bell Potter. Earnings growth expectations for the S&P 500, top 500 companies over in the States, 65% of the expectations for market earnings over there. The biggest growth since 2009.
Yeah.
And we're seeing it.
Yeah.
Yeah, we're certainly seeing it. In fact, you could probably say that it's over-delivering at this point.
Early days.
Yeah.
Yeah. So that's the expectations are high. Analysts expect this earnings season to be a real rebound from last year when companies were really suffering in the depths of COVID. So we've pulled out 5 expert investors and what they're looking for this reporting season. Should we go one for one?
Yeah.
Do you want to kick it off?
Kate Howard, portfolio manager at Fidelity, thinks that reporting season will bring a slate of reports that justify the recent share market rally.
Yeah.
From E will catch the P.
What does that mean?
You wrote the notes.
people often talk about price to earnings ratio.
Earnings will catch the
earnings
price.
will catch the price. The E will catch the P. Katie Hudson, the head of Australian Equities Research at Yarra Capital Management, is watching to see which industries have passed peak earnings. And what she means by that is there are a number of industries that are just on an unbelievable tear at the moment. Retail, like consumer spending, is just going crazy because of, JobKeeper, JobSeeker, and everything. JB Hi-Fi said earlier this year they were running out of TVs. Like, can retail keep that momentum going? Another one is resources sector. We're just seeing commodity prices at all-time highs. How long can that continue? So Katie's looking to see which industries have passed their peak earnings.
Interesting.
Yeah.
We have Brendan O'Day, the Managing Director of Milton, and he's keeping an eye on the dividend payout ratios. A, will they reset to COVID levels? Or B, are companies choosing to keep cash reserves on their balance sheet to protect in case of further COVID disruptions, which we're certainly seeing at the moment. And depending on which way a company goes will be a real indicator of the level of confidence within the boardrooms of some of the big companies around Australia.
So people might not be familiar with the term dividend payout ratios, and that's simply, if you make $100 in profit and you pay, $40 of it in dividends, then it's a 40% dividend payout ratio. It's the amount of your profit that you're paying out as dividends. During COVID, companies cut that right down to keep cash because they had no idea what was going to happen. So if it rebounds to pre-COVID levels, that will be a general indicator that businesses are feeling more confident about the direction of the economy, not feeling they need to hoard as much cash. Gabriel Rezmitsky, MD of Sandon Capital, is watching for indicators of the inflation story. Now, this has been a big one over in the US reporting season. A lot of commentary about it from CEOs over there. What are we going to see in Australia? Are we going to see, effects of supply bottlenecks? Are we going to hear about labour shortages like we have over in the US? Are those pressures easing? Are they staying? Inflation is definitely the buzzword of 2021. So it'll be interesting to see what it looks like in this earnings season.
Well, we have inflation numbers on Wednesday, Ren. So no doubt when we're in this hot seat on Wednesday, there'll be a lot of chit chat throughout the day. So hopefully we can contribute to that. And to close out, Paul McTaggart, Citi's head of research, is watching for 2022 guidance in terms of what's coming for. Is it going to be more than 2021?
Yeah. Not as worried about the 2021 results. More interested in 2022 guidance. What companies are projecting for the next financial year? Yeah.
So bull or bear from companies in the banks, mining, healthcare, retail, and real estate investment trusts.
Yeah.
So, do we want to close out with companies that have caught our attention?
One. Well, let's do it quickly because we are running out of time. Snap for me over in the US. Snapchat, you're a big user, massive user.
No, but look, it's done well.
Yeah, it has done very well. But I was listening to Evan Spiegel's earnings call, the CEO and founder. It's the world's biggest AR company, like augmented reality company. I'm just guessing that. I don't actually know if it is the biggest, but the investments it's making in AR are really interesting. And I was listening to that call, and for the first time ever, I wasn't thinking about it as, a 10-second video that you send and then gets deleted, but instead about the massive investments they're making in augmented reality. And their numbers are pretty strong, surprisingly strong for an app that I don't really think about. So Snap for me was an interesting one just because it sort of surprised me that it was still doing so well.
Yeah, 293 million daily active users on Snap.
Jeez.
So compare that with Twitter, and they have 206. So it's actually bigger than Twitter in terms of daily active users, which I found surprising.
Yeah.
Speaking of Twitter, to close out, Ren, a company that I think continues to be pumping out some pretty good earnings numbers. I think they had their fastest quarter in terms of revenue growth since 2014,
Yep.
something around that. Continuing to grow user base, and we spoke, I think, last time they reported around can they actually start to monetize effectively with the base that they've got. So
Yeah.
one
I
to watch.
I think the really interesting thing about Twitter is Trump obviously drove engagement on that platform for like 4 years, but they've managed to grow faster than they did in any of those Trump years.
Yeah,
Yeah.
true. Well, that brings us to the end of our episode on Basics 101 for reporting season. We'll obviously be coming back next week as some of the big US companies this week start reporting as well, and we'll continue to see the Aussie market pump out some numbers too.
Yeah, so join us for the rest of this week on AusBiz. We've got some big expert investors, and we'll be talking about the Boral and Seven Group potential merger.
Yeah.
But yeah, join us, same time, same place for the rest of this week.